All right. So today we're going to talk about automobile expenses. So for those of you who are in business and are writing off part of their car and are now trying to figure out how much of their car they can write off, but the discussion today would also apply to anybody who's employed and wants to write off part of their automobile as an employment expenses. So the rules are pretty much identical. So, what I'm going to do first is go over a short list of the expenses that are claimable by way of car expenses. And then we're going to get into more details about the logbook and things like that. So, the first thing, of course, that is the most obvious is fuel and oil. So, anything you spend for gas that you put into your car, obviously tax deductible. The other one is car washes. Now, the problem you may encounter with car washes is that getting receipts may not always be possible. So, one thing that we've found is that the auditors will tend not to be totally concerned if you were to claim a certain amount as long as the amount is reasonable and claim it without receipts. So, for example, if you were to claim and say, well, I wash my car every 2 weeks and it cost me $9 every time, and therefore claim 26 times $9 and put that as a car wash expense. And even if you didn't have receipts, odds are excellent that they wouldn't take much offense to that because of the fact that sometimes you just cannot get a receipt for how much you spend on a car wash. So, and it's also quite reasonable that you would wash your car on a at least semi-regular basis. The other expense that the people will often let slide without a receipt is parking. So, for example, if you've got a profession that's similar to ours as an accountant, and I'm often meeting people downtown to meet with lawyers or whatever, I think it's reasonable to claim a small amount. So, if you want to put $50 under parking, even if you don't have receipts for that, because receipts are not always possible to get for parking, it would usually not draw too much attention by the auditor or CRA. So, again, as long as the amount is reasonable, you're probably going to be okay with that. Now, keeping in mind that all these expenses that I'm talking about, you won't be able to claim at 100%. You will only claim a portion of them based on the kilometers that are business versus total kilometers. The exception to that rule is parking. Parking is the only expense that I'm going to be talking about where it's not prorated. Parking, you can claim at 100%, but all of the other expenses, such as the fuel and oil and car washes, would have to be prorated. The other expenses that would be claimable but prorated would be insurance. So, AutoPack. So, whatever you pay for your car insurance would also be an automobile expense. The other expense that is sometimes overlooked is repairs and maintenance. And so if you have any repairs done to your car, don't forget to claim those. But there's other repairs and maintenance that tend to be overlooked, and one of them that is often overlooked is oil changes because it's part of maintenance. It's not a repair, so they tend to forget about it. But if you do oil changes 3 4 times a year, well, it does add up to a couple $100, so it's worth claiming. The other one would be things like that you would just buy yourself and do yourself, such as windshield washer. So you might go to Canadian Tire, buy yourself a jug of windshield washer, and not claim that because you simply forgot that it relates to the car maintenance. Things like wipers. So anything that you do for the longevity of your car that you need, don't forget to claim all of those as under repairs and maintenance. And also things like tires, of course. If you're going to change tires, uh, don't forget to claim those. Another expense that's usually quite significant is interest. Because more and more people now are not buying their cars. They're buying a fairly expensive cars. So because of that, they will usually not be able to pay for it cash. So they will end up either financing it through the car dealership or through the bank. But regardless, you will probably incur interest. Now, the error that a lot of people make when they bring their papers or their information to the tax preparer is they will bring the whole payment amount. So they're going to say, well, my payments are $386 biweekly. But that doesn't serve us any purpose. I don't care what your payments are. What I need to know is what is the interest that you're paying in your payments. So it's the only the interest that's tax deductible, not the entire loan payments. And finally, another expense that tends to be deductible are leasing expenses. So if you're instead of buying a car, you decide to lease your car, the leasing expense would be deductible. And all of these expenses, except for parking, remember, are prorated based on your business kilometers compared to your total kilometers. So then the question always comes up, well, how do I determine this percentage that I can claim? Well, the percentage is going to be based on your logbook. So there are different ways of coming up with this percentage. So there are people out there who are extremely meticulous and very good at keeping a logbook. So we get to the end of the year and we ask them what percentage of their car is used for business, and they'll be able to tell me, well, I drove 16,286 kilometers for business, and total kilometers driven is 20,000 and whatever. So in that case, coming up with a percentage becomes extremely easy because they have meticulously kept a logbook. So keeping a logbook can be done obviously manually. That's one way of doing it. There's also a lot of people who are using an app of some kind. And there's several apps up there. And I know there's a few people, a few clients that we have who have an app and they swear by it. They think it's the best thing since sliced bread. So using an app is also a great way to determine the percent of your car that's business related. Now, if you're like me and you're not too keen on apps and you're definitely not good at keeping a logbook, then you may say, okay, well, I'm in trouble because I can't keep a logbook even if my life depended on it. So there's a couple of solutions for you people out there who can't keep a logbook. Number one is to consider um, keeping a log for a short period of time. So if you could keep a log for, let's say, 3 months, and during the 3 months, you determine that your car is 78% business related. So you've kept meticulous records for 3 months, and you've determined during those 3 months that you had 6,000 some odd kilometers out of business, over 8,000 kilometers, then you have yourself a percentage. Now, even if you haven't kept a logbook for the entire year, claiming your whole year based on that short period of time is generally well received by the auditors. So if you want to at least keep a logbook for a short period of time and then extrapolate that for the entire year, that is also quite acceptable. The other way of doing, which is I consider it cheating, but also has been, I don't think, blessed by the auditors, but we've had a lot of success in defending, is if you were to do your logbook, say, on a weekly, monthly basis, even from your kitchen table. So, what that looks like, and by the way, that's how I do it. And if you're going to use that method, or regardless, is to consider if you're going to use a positive logbook or a negative logbook. Now, I suggest you don't look those terms up because I invented them. So it's not something that's out there. So what a positive logbook looks like is when you would claim the expenses or the kilometers that are business related. That's a positive logbook. A negative logbook is, rather than track your business kilometers, you track your personal kilometers. So for me personally, that's how I do it, because the bulk of the driving that I do, almost all of it, is business related. So all I do is track now the personal kilometers and subtract that from my total kilometers. So at the end of the year, I will be able to tell you I drove 20,000 kilometers, and out of those 20,000 kilometers, there are 4,000 that are personal. And I will provide tremendous detail of what those personal kilometers are. So traveling to and from work is personal. Going to church, going to the groceries, all of those things, I will subtract and track those. So at the end of the year, like I said, I'll have 20,000 kilometers driven minus the 4,000 that I've got very good detail of what's personal, and whatever's left is my business kilometers. And then that will give you the percentage that you're looking for. And then As far as tracking, though, when I said from the kitchen table, what I meant by that is that I tend to record in a journal all of the kilometers that I do that are personal because I use the negative logbook. But if you're going to be the opposite and the bulk of your driving is personal, you may want to simply record the kilometers that are business. And you could do it from your journal or from your calendar. So then it becomes a fairly, well, I wouldn't say easy, but simpler way of doing. So if you were to go through your calendar and you were to track your business kilometers, you could say, well, this week I went there, 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 there. And I know where they live. I've got their addresses because I've marked them down in my calendar. I can easily now go to Google Map and have Google tell me how many kilometers it is to and from that particular place. So that's what I mean by doing it from your kitchen table, is that you could say, I can easily track the number of kilometers that I either drove personally or business by using Google Map, as long as I've got a track of all the trips that I've done that are either personal or business. And again, if you rely on your calendar and you mark everything you do in a calendar, that will really help simplify how you will determine the percentage of your automobile that's business or personally related. So this session here is fairly short because all we're covering is automobile. Are there any questions, Kayla?
Hey, Jean-Guy.
Hi, Kayla.
So there's no questions at this time, but you talked a little bit about covering vehicle repairs. What
Yes.
if you do all your own vehicle repairs? Can you count your own time?
Yeah, so that's a question actually that I get quite often, Kayla, is that what happens if I do all the repairs on my vehicle myself? Can I add on $3,000 for the time I spent repairing it? And no, you can claim all the repairs, all of the parts that you bought and all that, but you wouldn't be able to claim your time. Because if you were to claim your time and put that as an expense, you would also have to claim it on the other side as a revenue because for the work you have done for yourself. So no, you cannot claim your own time. You can only claim the cost of the parts that went into fixing the car yourself.
All right, sounds good. So we talked a little bit about buying and leasing. Do you think it's better to buy or lease a car?
Oh, phenomenal question. We get that all the time, and people always think that it's better to lease. And the word out there is that leasing is far better than buying. But fact of the matter is, if you were to do the math, and at the end of the day, once the smoke is cleared and you've bought your car or leased your car and got rid of it, at the end of the day, you're going to find that the claim is exactly the same, whether you buy it or lease it. There's no advantage of doing one versus the other for tax purposes. So what I tend to recommend is if you're making a decision on whether you should buy or lease, make the decision as if you lived in a world where there were no taxes. So in other words, does it make more sense to buy or to lease? And that'll depend on the financing that you're getting. So if you're getting a tremendous rate of interest, then buying is even more advantageous. As a general rule, I'm not a huge fan of leasing, but there are occasions where I found that for reasons that were kind of difficult to understand, is the leasing was so efficient that it was made more sense leasing. And the other thing that can happen with leasing is that sometimes the payments will be smaller. So you may find that buying a car will require $800 a month payments, but leasing it would only be $500. Well, if you can't afford to make the $800 a month payment on the car, then you lease it, because that's the only alternative you got left. But again, the decision should be based on non-tax related information, not based on taxes.
All right. Looks like that's all the questions we have at this time.
Fantastic. So, and again, I invite you to, if you have any questions after you've listened to this, I invite you to send those questions via email. I'm always happy to answer those questions via email, and hope you'll stay tuned for next week's episode of How to Save Taxes. See you next week.